Morgan SLV here. Hey, let's go over gold and silver. Today's date, 8/21/2010. I'm trying to stay a little bit more on camera. I notice I go off camera a lot, and I'm trying to figure that thing out. So let's get this thing adjusted just a little bit. All right. Bottom line is this. Once again, it's 8/21/2010. Gold, $12.28. Silver's $18. Not much of a move from yesterday. Ratio is 68-1. I remember when I first started purchasing silver, I want to say it was like 77-1 when I first started purchasing silver, as in the ratio between silver and gold. Let's go over some things. Let's go over foreclosures right now. Now, a good friend of mine, a new friend of mine, but a good friend of mine, his name's Ben. He has been a broker, a real estate broker for a long time. He owns some strip malls, some rentals, some properties in various locations such as Tahoe. And he's saying right now Fannie Mae could if they so deemed, foreclose on over 1 million properties right now today. And you know, of course, that's kind of a concerning deal to him, right? That's his industry. Foreclosures, the average number of foreclosures per year in July is about 95,000 a year. 95,000 foreclosures per year, US wide. Okay, in July alone. Okay, now I just gave you the yearly total. In July alone, we had 94,000 foreclosures in our country. If you had in years past, if you had a 9% jump in foreclosures, that would be newsworthy. Okay, but we just had a month. We just had a month that had a 9% jump just in 1 month, just in 30 days. Okay, so we are on the downside. We're doing what we used to do per year. We're doing it per month, and so it's just one of those things where the bottom line is this, and I've said it before: when the average person with an average job can afford an average home, then the pricing will be correct. We're still a long way off. Give you another casing deal. I know I've talked to you guys about my buddy Rich. He's an ex-narcotics officer. When he was he's been looking for property in Montana for about 4 or 5 years. When I started studying this stuff almost 4 years ago now, I told him, I said, well, if you don't mind the fact that your property, the equity in your property is going to continually go down, then go buy it. I mean, if you're ready to retire and you're kind of checking out, good for you, go buy it. And the other thing that I kept warning him is he's got one of those ninja loans on his property that he's got here in it's up above Newcastle. I said, you need to get out of that. If you're not going to be leaving, you need to get out of that. And by the way, I don't think your home's appraising for what you think. And he kind of argued back and forth because his sister's a broker. I said, okay, well, go check it out. I said, I study this stuff every day. I can almost guarantee you I study it as much as your sister. So sure enough, number one, he put $125,000 down on his house. That's gone. The house appraises, I want to say, at about $240,000. He owes $250,000. He's $10,000 upside down. I said, Rich, number one, are you going to Montana? Well, I don't think so. Number two, get out of that funny loan. Okay, it's going to ratchet up in about 13 months. And I said, write the check right now, because I know he's got the cash. I said, write him a $10,000 check and fix your loan, just for a type of a parachute, so that you don't get caught, with your hand in the cookie jar a couple years from now. He's retired. Yeah, he's working. He's a working retired. That cracks me up. Retired, but he's working. So I've been warning him, and everything that I've told him so far has come true. Now, guess what? Guess how many ounces of silver he's bought? You guys ready? Donut. Nothing. He's not listening to me about that at all. His PERS account. We all know that we just had we're having a meltdown in the real estate portion of our economy, and his PERS account that's what they were mainly invested in, or I guess they were heavily invested in that, and now his account's all beat up. So, I'm just saying, right? I'm just saying, pay attention. Keep your ear to the ground, pretend like you're an Indian, and put your ear to the ground, see if any cowboys are coming, because I'm telling you right now, things are getting stupid. Things I see that we need to do is shrink government, okay? It's been said that our government in the last 10 years has doubled in size. Okay, so given the fact that they get 100% of their money from you and me, and now their company, the government, right, is twice the size. I'm going to start trying to look into the camera here too. I'm trying some different things. They're twice, the government is now twice the size that it used to be 10 years ago. Is your income twice as big? I don't think so. We need to bring our military home. I said it the other day. We're in 170 countries right now. We cannot afford that. Okay? You know, during the Cold War, you know, I would have to say I was pretty scared of, you know, what Russia was doing, and you know, they seem to have their ducks in a row militarily wise, but then they collapsed. And if you collapse and can't afford, you know, to fire off your military, you know, because you have $0, I mean, that, you know, that's not gonna help us. And if we don't change what we're doing, we're gonna be right there with them. The other thing is, you know, I believe you just need to study. You know, the harder you study, the luckier you'll get. You know, that's my theory anyway. You know, so, all right, so you're not going to do precious metals. Okay, well, what are you going to do? Are you going to invest in real estate right now? Robert Kiyosaki is a hero of mine, so to speak, and his bottom line is this: you never buy a property with the intention of it going up in value. Never. Don't do that. Okay, so if you're thinking, wow, I can get screaming deals right now, I can tell you this right now: I don't think property is going to be going up for some time. I think it's going to continue to go down for some time. Number one. Number two, yeah, I guess you could do ETFs, but unless you can hold your wealth at this time in our planet's history anyway, unless you can hold it in your hand, you don't really own it. You don't really have it. You know, like I say, the last thing I want to hear is my ETFs went to zero on Monday and I'm trying to cash them in on Friday. That's a bad thing. So, you know, I'm just saying, study up. By the way, I'm just really pleased with my channel. It's increasing leaps and bounds. My subscribership's going way up, and you know, I just want to take this time to, you know, I just kind of, I don't know, maybe I'm kind of more humble than most. I believe in thanking people, and I'm thank you for your viewership and whatnot. You know, as you know, we're gonna get ready to monetize this thing, and so anyway, it's been a fun ride so far. You know, like I say, I'm not real technical as far as what I'm putting out on my videos, because you know, that's your job. My job is to bug you about studying, and you know, be a learner, you know, and don't be a whiner while all this stuff's going on. I mean, I'm not going to say I don't whine, because I do. I mean, I'm complaining a lot about, oh, gosh dang, I mean, my money's not going too far. But the bottom line is, you're either going to be part of the solution or part of the problem, right? And so I plan to be on part of the solution. I plan to help as many people as I can do that. Okay, so anyway, we're going to see you shortly. And I'll probably have a little bit more technical information next time go around. But, you know, as you know, it's a busy time for me, you know, my business and whatnot. And my son's business has taken off. SmallEngineAdviceForDummies.com, SmallEngineAdviceForDummies.com. I just want to throw a shout out there. I'm real proud of him. You know, he's actually making more money off of his online business than I'm making off mine, and I couldn't be more proud, right? Everybody's proud of their kids. So anyway, thanks for your viewership. Morgan SLV out.